Hi, I'm Karen Newton, and today's video is all about shares. I'm not going to go into great analysis about them. I'm going to talk a little bit about strategies. Now, in my book, 10-Minute Shares, Simple Strategies for Making Money on the Share Market, there's a previous video where I went through the contents of this book, and I'm going to talk about some of the strategies that are in the book that will help you if you are looking at starting share investments. Now, there are all different types of investors. Okay. You have traders, you have value investors, you have speculative investors, growth investors. I am what is known as a dividend investor. Now, it doesn't mean I don't use some of the other strategies, because when I think the timing is right, I will use those strategies. But predominantly, I am a dividend investor. Now, what dividend investing is, I invest for the income that I can get off the shares. And because of the type of strategy that I use, I am looking for companies that will pay a monthly dividend or a quarterly dividend. And the reason for that is because I use the compounding effect. Now, with a compounding effect, if you have ever seen a chart on compounding, you'll see that the chart sort of goes along at this level for a little while, and usually quite a while. It starts to turn and then it accelerates upwards. And it's often referred to as a hockey stick. Any compounding chart is exactly the same. It trickles along, goes up a little bit, and then suddenly accelerates. And that's what I look for in dividend investing. So when I first started dividend investing, I made very little dividend return, and it was very little. I started off making about 50p a month, and then it went up to £10, and then £100, and then £1,000, and up it went. The compounding effect needs time to take effect, and I want to accelerate that, which is why I use monthly dividend shares. Now, there's some shares that I use in the UK. I have investments in the US, I have investments in the UK, and I have some EU investments as well in shares. And I use different strategies, but we're talking about dividend investing today. So I am looking for lower price shares where I can buy a lot of shares for my money. I want shares that are going to give me a monthly return or at least a quarterly return, because the compounding effect, like I said, it takes a little while, and if I've got income coming in monthly and I'm reinvesting it every month and buying more shares, then the hockey stick is going to move along. The bottom of the hockey stick is going to be a shorter length than if I was investing a lower amount. Right. So instead of taking years to go across, I will have maybe 1 year or 2 years, but the hockey stick will have gone across like that and accelerated. The base is shorter. So monthly dividends are the best way to invest. What I'm looking for are shares that will give me around a 7-8% return. I know with one company it hovers, obviously if I explain dividend yield to you, right? Yield is the interest rate that you earn for investing in a share, and it's calculated based on what the dividend is that's being paid and the price of the share, the current price of the share, and that works out the yield. Now, I have companies that I invest in that have a stable, fairly stable price, so the yield hovers around 7 to 8%. Now, by using the compounding effect over a 12-month period, if the yield is at 7.17%, I know that I will actually be earning 8 point something or other percent. Right, it's 8.2, so just under an extra 1% yield. If it's around 8%, then I know I'm getting 9% return just by having a monthly dividend share that is reinvesting. Quarterly, the return is slightly lower because you're only being paid 3 monthly, so you're not getting the compounding effect every month. Right? So for me, the preference is monthly dividend. Quarterly dividends work to boost my income in a particular month, allows me to reinvest a bigger amount of money. So just using simple figures, if for example the quarterly dividend was £100 and my monthly dividend was £10, in the month that the dividend pays, the quarterly dividend pays, I'd have 110 to invest in shares. Right. So that means I get a little boost each month. And what I do is I use quarterly shares that pay on alternative months, so that over a year I have a boost of income coming in every month, if that makes sense to you. So if a share pays in January and April, then the next share I look at buying would be paying in February and May, etc. So I always have a quarterly dividend coming in every month, as well as having my monthly dividends coming in. And that allows me to boost the compounding effect return on shares. The compounding effect means that I get a much higher return. The other strategy is, because I am buying shares on a monthly basis and I'm reinvesting on a monthly basis, then I get growth, because no share stays like that in price. Shares move up and down. Okay, so sometimes I might be buying in the dip, sometimes I might be buying in the high, and overall I will get a higher return, a growth return over a year. And depending on the strategy I use, it could be between a 5 to 10% or 50, even up to 15% growth in the value of the share. Add that on to my dividend return and I am working round about a 15% return on my investment annually. I know that you can go and get 20 or 30% returns. And if you're Warren Buffett, you're usually working on a 20% return. But I'm quite happy with my 15% return on my shares, 15% every year, because I'm not doing a lot of work. Warren Buffett works harder for his money. He gets a slightly higher return than I do. I like a simpler life. And that's what my book, 10-Minute Shares, is all about. I prefer just to spend around 10 minutes a month looking at my shares and working on them. And I get my 15% return for that. So, as I said, one of the strategies is using the compounding effect with monthly dividend shares, using some quarterly ones, and you will get a really good return month in, month out, which will give you a stable annualized return. Now, like I said, there are different types of investors. If you were looking at Warren Buffett, then he is what's known as a value investor. So he does a lot more work in analysing companies, reading accounts, determining whether the company is overvalued or undervalued, and he has a strategy of going in to buy shares. There are people who invest for growth, and I do put a percentage of my pot away for growth investing. And I am looking for, again, smaller level shares that I believe are going to double in price. And I'll talk a little bit more about those on another video. There are lots of different strategies you can use, and one of the advice I give my clients is don't mix strategies. If you have bought a share as a dividend investment share, then don't worry that the price is going down. Buy more shares, because then you get more dividend. If you've invested for growth, then yes, you need to worry if the price is going down, because it'll take you a while to get that back. But when we're focusing on dividend shares and the price drops, we see a sale, and that means I can buy more shares for my money. Very simple strategy. It allows me to build my income really rapidly and accelerate that hockey stick to get the return. So today's information is based on using the compounding effect on monthly dividend shares. There is more information in my book about that, 10-Minute Shares, and you can buy that book on Amazon, and I'll put the link in below the video. Come and have a look at my website and Facebook. I have a Facebook group. I'll put the links to that in there as well. And come and discover what we do for investing. Because if you can invest now and you can start your hockey stick off now, where will you be in 5 years' time? How wealthy will you be in 5 years' time? And that is my sole focus of working with my clients. Where will they be in 5 years' time? Where will they be in 10 years' time? So thank you very much for listening to the video. Hope you got something out of that. And just remember, 10-Minute Shares, you can get it on Amazon. Thank you.